Hey everyone, welcome back to Corporate Decoder, where we decode the hidden secrets of your favorite companies. And trust me, this ACRO Biomedical filing has more secrets than the average spy novel. We're diving into ACRO Biomedical CLGLT's latest report, a 10Q, which is like a quarterly checkup for the company's health. And folks, this report paints a picture that's, well, let's just say it's a unique one. We're talking about a company with no revenue, a significant lack of employees, and a business model that seems to be hanging by a thread. First things first, let's look at the table of contents. It's pretty standard stuff covering financial statements and management discussions, but what's really interesting is what's not there, or rather what the numbers are actually telling us. Let's jump straight into the financials, starting with the balance sheet. As of September 30, 2024, ACRO Biomedical reports a total of just $701 in current assets. That's less than $1,000 in cash and no prepaid expenses. Compare that to December 31, 2023, where they had $1,026 in current assets. Not exactly a hoard of cash, right? Their total assets are also down significantly from $58,459 at the end of last year to just $38,000 September of this year. Now look at the liabilities. Their accounts payable and accrued expenses are a whopping $155,507 as of September 30, $2,444 at the end of 2023. So while their assets are shrinking, their bills are growing. This is a classic red flag, suggesting the company might be struggling to meet its short-term obligations. And then there's the stockholders deficit. It's negative, meaning liabilities exceed assets. As of September 30, 2024, this deficit stands at a substantial $25.24. This isn't just a small hiccup. It's a fundamental indication that the company's equity is underwater. Let's move on to the statement of operations, which shows us how the company is performing in terms of profitability. And here's where it gets really interesting. For the 3 and 24, ACRO Biomedical reported seal revenue. That's right, no income. Despite having no revenue, they still managed to rack up operating expenses. For the 3 months ended September 30, 2024, those operating expenses were $9,106, primarily for professional fees related to being a public company. For the 9 months, it was $28,490. This, of course, resulted in a net loss. For the 3 months, it was $10,229, and for the 9 months, a much larger $31,624. These numbers, when divided by the over 60 million shares outstanding, translate to a loss per share of 0 for both periods. It's almost like the company is actively trying to obscure the reality of its financial situation with these almost negligible per share losses. Looking at the changes in stockholders' equity, we see much of the same story. The accumulated deficit continues to grow, reflecting the consistent losses the company has been reporting. For example, the balance on September 30, 2024 shows an accumulated deficit of over $32 million. This is a massive hole that the company is in. Now let's look at the previous year. The 3 and 9 months ended September 30, 2023. Here, the picture is even more stark. We see operating expenses of over $1.5 million and a net loss of nearly $1.6 million for the 3-month period. For the 9 months, operating expenses ballooned to over $8.7 million with a net loss of almost $8.8 million and a net loss of nearly $1.6 million for the 3-month period. For the 9 months, operating expenses ballooned to over $8.7 million with a net loss of almost $8.8 million. A significant portion of those 2023 expenses involved amortization of deferred stock compensation, totaling over $8 million for the 9-month period. This was related to consultants who were paid in stock for research and development that ultimately yielded no products. This is a critical point. Paying consultants millions in stock for R&D that produces nothing is a huge red flag about the company's strategy and execution. Now let's check the cash flow statement. For the 9 months ended September 30, 2024, they used $26,177 in operating activities, which sounds small, but given they have almost no assets, it's significant. The primary driver here is the net loss. Interestingly, they had $26,502 in cash provided by financing activities. This came from advances from a minority stockholder. It seems the company's lifeline is not its business operations, but rather continued funding from private investors. The same pattern is seen in 2023, where advances from related parties were the only source of cash inflow. Digging into the notes, we find that ACRO BIOMEDICAL was incorporated in 2014. Their stated business is the sale of cordyceps-related products. They even tried to develop a research and development program, but it didn't lead to any products. The consultants they hired are gone, and so is any hope of revenue from those efforts. This next part, the going concern note, is probably the most important. The report explicitly states there's substantial doubt about the company's ability to continue as a going concern. This is because of minimal cash, no revenue, consistent losses, negative cash flow, and their stock being on the expert market with no public quotes. They also mention that their primary source of funds has been advances from a minority stockholder, and they can't guarantee that this funding will continue. This is make or break territory for the company. Without that continued support or a sudden shift to profitability, ACRO BIOMEDICAL could be headed for serious trouble. In the management's discussion and analysis section, they reiterate the lack of sales and the reliance on financing. They admit they have no full-time employees, and even their CEO works part-time without compensation. This tells you a lot about the operational capacity of the company. They try to explain the lack of sales by pointing to COVID-19 restrictions in China and the subsequent economic impact on their customers. While external factors can play a role, the complete absence of revenue for this long, coupled with the failed R&D efforts, suggests deeper internal issues. Here's a real gem from the controls and procedures section. They state their disclosure controls were not effective due to the inadequacy of internal controls. The fact that their sole employee holds both CEO and CFO positions and a limited internal audit function. Basically, their entire financial reporting system is run by one person who also works part-time. This is a recipe for disaster and raises serious questions about the reliability of any financial data they present. Finally, the exhibits list. It's pretty standard, including certifications from their CEO and CFO, which, given the previous point about their internal controls, are certainly interesting to see. So what's the story here? ACRO BIOMEDICAL is a company that is not generating any revenue, consistently losing money, and is heavily reliant on external funding from a single minority stockholder. Their R&D efforts have failed to produce any products, and their internal controls are practically non-existent. The management even admits to substantial doubt about their ability to continue as a going concern. In essence, this isn't a company that's just facing a downturn. It looks like a company that's struggling to find its footing and a viable business model. The lack of revenue combined with the growing deficit paints a grim picture, and the dependence on a single source of funding is a massive risk. While they propose to develop and market nutritional products, the past performance and current operational state don't inspire. Alright, that's our breakdown of ACRO BIOMEDICAL's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.